Hello everybody, in this video I am going to give an update on my portfolio and show you all of my positions. Let's get started. Right now my portfolio is worth $257,222.98. In the past year I am up $46,584.86. Year to date I am down $17,161.14. And today was a green day for me. I was up $16,689.78 during the day, and then I am up $841.90 after hours. Let's go over my positions. I did make a lot of new ones compared to my last portfolio update, so let's talk about these. I'm selling Amazon $260 covered calls. These expire July 31st. My return, $500. Amazon right now is at $240.90. My average cost, $259.30. I have 500 shares. My return, I am down $9,200. Next up, we got Delta Airlines. I'm selling Delta Airlines $75 covered calls. These expire July 31st. My return, I am down $265. Delta Airlines right now is at $92.76. My average cost, $92.33. I have 500 shares. My return, $215. I'm selling Google $360 covered calls. These expire July 31st. My return, I am down $1,092. Google is at $353.67. My average cost, $380. I have 400 shares. My return, I am down $10,540.98. I'm selling Robinhood $115 covered calls. These expire July 31st. My return, I am down $900. Sorry. Robinhood is at $101.90. My average cost, $114.30. I have 2,000 shares. My return, I am down $24,801.44. I'm selling SoFi $20 covered calls. These expire July 31st. My return, I am down $1,040. SoFi is at $18.20. My average cost, $9.59. I have 8,000 shares. My return, $68,894.52. My average cost went up because I recently was assigned on some puts that I was selling, so I had to buy an additional 2,700 shares at a much higher price. Most of my shares I got like around $5, but that's basically what happened. Now, for these positions, some of these I don't really care which way it goes. Well, let's go through one of them. Let's go through them one by one. So Amazon, if Amazon stays below $260 per share at expiration, then I get money from selling these covered calls and then I keep my shares of Amazon. However, if Amazon goes above $260 per share at expiration, then I will be at risk of getting my Amazon shares getting called away. However, like what happened this past expiration date, I ended up actually having Amazon go below my strike price and then keeping my shares, and then now I'm selling new covered calls on it after the fact. So with the way things are right now, I mean, Amazon is currently below $260 per share. I'm expecting it to stay below that, and then I'll just do the same thing as last time. After these covered calls expire, then I'll do new covered calls on the shares of Amazon that I keep. However, if Amazon does actually go up to $260 per share and I get my shares get called away, I'm fine with that too, because at the end of the day, either way, I'm making some profit. So I'm fine either way. Delta Airlines, I did this position specifically just to gain a couple $100 overall. You know, that's basically what happened here, because I chose a strike price of 75. Right now, Delta Airlines is well above that. It's at 92. So I didn't open this position to capture gains from Delta Airlines going up in stock price. This was purely for making money off of the covered call, and that's it. So overall, I make a couple $100. And yeah, that's pretty much the only reason why I have these covered calls on Delta Airlines. I don't intend to have these long term, but if for some reason Delta Airlines drops to below 75, then I guess I'll have to keep my shares. But I actually intended for Delta Airlines to get called away, so I don't want to keep them. I actually want Delta Airlines to stay above 75 at expiration, so I could get my shares of Delta Airlines get called away and then make a couple $100 overall. Google, it's pretty close actually. I chose 360 for my strike price. It's at $353.80, so not too far away, honestly. But I'm fine either way. If it goes above 360 and I get my shares of Google called away, I'm okay with that, because that still means some profit overall. And if it stays below 360, I'm comfortable keeping shares of Google long term anyways. So this one, I'm happy either way. Robinhood, it's at 101. I chose strike price of 115. Again, if it does actually go to 115, I mean, I'm gonna make it above. What was it? Because 115 is around my average cost, and I'm down quite a lot, $24,801. So if it actually goes above 115 at expiration, I'm gonna end up profiting around $25,000 anyways. So I'll be happy with that outcome. And if Robinhood stays below 115 and I keep my shares, then I just make some money off of selling these covered calls. Market value is negative 8,000, so $8,000 left to go. That's a lot of money to be making for selling covered calls. So either way, I'll be happy. SoFi, now this one is pretty interesting because I've decided to sell a strike price lower than usual, because I think last time I was selling it at 22 covered calls, but now I chose the $20 strike price, which is lower. This way I get more premium from selling the covered calls. However, if SoFi were to actually explode up in price, I would not I would lose out on those gains. So it's a trade-off. However, I'm willing to take that trade. If SoFi actually does go up to $20 per share at expiration, or even before expiration, then I might roll it out just to keep my shares of SoFi. For my buying power, I have $366,821.55 in buying power. This is a margin account. My margin buffer indicates how close I am to a margin call. The higher your buffer percentage, the lower your risk of getting a margin call. My margin buffer is 45.48%, which is pretty high actually. That's pretty high margin buffer. So I'm confident that I don't have to worry about margin calls anytime soon. As for how much margin I'm using $369,199.02 of margin. My annual interest rate is 4.50%. The daily interest that I am paying is $43.84, and I'm using $1,000 of margin interest free. So I'm doing okay. 257,000. I've recovered quite a lot from my lows of this year so far. I know I lost a lot of money at one point, but I've climbed up since then. So made a nice recovery. And honestly, it's still June. It's June, so I mean, we still have plenty of the year left to go. So we'll see what happens from now until the end of the year. But I wanted to make this video just to show you guys where my portfolio is currently at. And yeah, it's doing quite well, actually, I would say. All right, that's pretty much it for this portfolio update. I hope you guys enjoyed watching me go over my portfolio and my positions. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. Thank you so much for watching, and I'll see you guys next time. Bye.